Astera Labs jumped 6.8%, Lab scores 66. By its PCIe 6 retimers dominate, holding roughly 70% of the global market, a near monopoly that leaves rivals scrambling. Industry forecasts demand 1.2 billion units by 2029. Astera already ships 840 million, securing revenue pipelines. We'll dissect how that dominance fuels margins, powers next-gen data center growth, and drives the upcoming earnings surge. Astera Labs sits as a Tier 1 bottleneck in the AI supply chain, the interconnect layer, currently in a rising phase. Astera Labs is on every screen, surging 6.8% to $487.10, not because of a sudden earnings surprise, but because the market is finally waking up to the physical bottlenecks of AI. This stock has outperformed the XLK by an astonishing 127.7% over the last 30 days, signaling a profound capital rotation towards the foundational hardware that makes AI possible. Despite the broader market's extreme fear sentiment, Astera Labs is attracting aggressive positioning, particularly from individual investors who are increasingly targeting pure-play AI infrastructure bottlenecks. The consistent beat streak on EPS, now 4 quarters running with an average surprise of 19.7%, provides the fundamental bedrock. This rally is not just speculative. It reflects a deep conviction in Astera's critical, irreplaceable role within the AI supply chain. The question is whether the underlying engineering reality can actually justify this premium. The engineering reality for Astera Labs centers on PCIe 6.0, Peripheral Component Interconnect Express, the high-speed serial computer expansion bus, and its demanding signaling. Astera's Aries PCIe 6.0 smart retimers operate at 64 GT/s, gigatransfers per second, the raw data rate that defines interconnect speed. To achieve this, these chips must master PAM4 signaling, pulse amplitude modulation with 4 levels, encoding 2 bits per clock cycle. This is a monumental shift from PCIe 5.0's NRZ, non-return to zero, signaling, which uses only 2 levels. PAM4 effectively halves the Nyquist frequency, but it quadruples the sensitivity to noise and signal attenuation, making signal integrity across server backplanes a critical, physics-bound challenge. Without active retiming, data streams at 64 GT/s would degrade and corrupt within inches of PCB trace. Astera's monolithic silicon integrates Cosmos, connectivity system management, and optimization software directly onto the die, actively compensating for this signal degradation and preventing link training failures at the hardware level. This direct integration minimizes latency overhead, a key advantage over multi-chip module competitors. Marvell, MRVL, is still a step behind in delivering production-ready PCIe 6.0 retimer silicon. Broadcom, AVGO, commands scale but lacks Astera's hyper-focused, low-power optimization for these specialized retimer sockets. The physical limits of copper wiring and the inherent complexity of PAM4 signaling at 64 GT/s mean Astera's engineering is not just justifying the market's bet, it is the absolute prerequisite for the next generation of AI compute. Quarterly financials showing modest revenue momentum for Astera Labs. By Q4 2026, the relentless acceleration of hyperscaler capital expenditure into high-density AI clusters will expand Astera Labs' revenue growth beyond its current 93.4% rate, defying the drag of normalizing monetary policy and global trade friction. The macroeconomic landscape is not a passive backdrop. It is a living force, acting as both a friction and an accelerant for the physical layer of computing. The Federal Reserve has held interest rates steady at 3.63%, hinting at a potential hike later this year. Yet, the yield curve is normalizing with a positive spread of 31 basis points, while prediction markets peg the U.S. recession risk at a mere 9.4%. With CPI, Consumer Price Index, the metric tracking the average change over time in prices paid by consumers, sitting at 0.6% year-over-year, and unemployment at 4.3%, the monetary environment is stabilizing. This stabilization acts as an economic tailwind, reducing the cost of capital for hyperscalers. the massive cloud providers like AWS and Microsoft that build the physical infrastructure of AI. While the broader market stalled, with the S&P 500 and the semiconductor-heavy SOXX index finishing flat at 0%. Astera Labs surged 6.8%. This divergence signals a massive capital rotation. Money is fleeing commoditized software and concentrating directly into Tier 1 interconnect, the physical hardware components that link chips together, bottlenecks. But a powerful political friction is building. Rising fears of a global trade war, driven by tariff uncertainties, threaten to disrupt global technology supply chains. If punitive tariffs are enacted on server components, the cost of deployment rises. However, Astera is highly insulated because they design specialized silicon retimers, high-speed signal repeaters that clean and regenerate data streams to prevent corruption rather than heavy systems. Their product sits at the very top of the value chain. This high-margin profile, boasting a 77.8% non-GAAP gross margin, allows them to absorb trade-related supply chain shocks that would crush lower-tier hardware manufacturers. This operational resilience is anchored in the physical geography of the semiconductor supply chain. Capital flows through a highly sequential pipeline, from silicon design to manufacturing equipment to foundries to advanced packaging, the high-density integration of multiple chips on a single substrate, and finally into the server rack. TSMC's May 2026 revenue of 417 billion new Taiwan dollars, representing a 30.1% year-over-year increase, proves that the foundry layer is operating at maximum velocity. To secure its position, Astera Labs has strategically expanded its Taiwan operations. This is a direct geopolitical countermeasure designed to mitigate advanced packaging bottlenecks and bypass cross-strait supply chain friction. It ensures their Aries PCIe 6.0, the sixth-generation high-speed peripheral component interconnect express standard transmitting at 64 gigatransfers per second. Retimers are co-engineered directly alongside TSMC's output. This integration feeds into a broader social and political shift, the growing public and regulatory backlash against big tech's soaring energy consumption. Data centers are hitting a physical power wall, making energy efficiency a political mandate. This is where Astera's physical architecture acts as a massive accelerant. Their Taurus active electrical cables, copper cables embedded with microchips to boost signal strength over longer distances, consume significantly less power than optical connections at short distances. This engineering reality directly addresses the social pressure on cloud providers to reduce power consumption per token. We are currently in the rising phase of this capital cycle, and the peak is nowhere in sight. While Wall Street notes the long-term threat of co-packaged optics, an advanced technology that integrates optical transceivers directly onto the silicon substrate, by 2028, copper remains the undisputed physical medium for the next 2 to 4 years. Astera's qualification lock, the deep co-engineering process that embeds their firmware into the system architecture, making chip replacement require a complete motherboard redesign, guarantees their sockets remain mandatory for the upcoming Blackwell hardware cycle. The physical limits of copper wiring ensure that Astera Labs remains the ultimate toll booth on the AI fabric. Astera Labs reported earnings per share of $0.61, beating the Wall Street estimate of $0.55 by 11.6%, a solid beat that signals strong execution. Astera Labs posted a 4-quarter earnings beat streak. EPS surprise fell from 33.2% in Q2 2025 to 23.3% in Q3 2025, then to 10.6% in Q4 2025, before rebounding slightly to 11.6% in Q1 2026. The average surprise across the 4 quarters is 19.7%. Management's guidance has been conservative, delivering upside each quarter while EPS growth rockets at 144.4%. The market has rewarded the streak with a 6.8% price jump to $487, but the reward curve is flattening. Price gains have slowed despite continued beats, reflecting investor fatigue at a trailing P/E of 333.6x. The pattern shows disciplined guidance, but diminishing incremental market upside as valuations become stretched. Astera Labs, Interconnect, is trending higher at 487 points. Management's headline is a silent structural pivot: software, platform, and services. In their latest SEC Securities and Exchange Commission filings, the term lease appears 39 times, software 11 times, and platform 11 times, while manufacturing drops to 9 and AI to just 7. This linguistic architecture is designed to make investors feel they are buying a high-margin, recurring SaaS, software as a service, business, and to make them not think about the heavy, cyclical capital expenditures of physical silicon manufacturing. Flip the table. While management paints a picture of a recurring software ecosystem, insiders are executing a massive physical exit. Over the past 90 days, insiders net sold 2,161,942 shares. This pattern historically precedes a cooling of momentum as early-stage executives lock in gains before hardware cycles normalize. No qualifying executive statement in the last 6 months has addressed this exit, leaving the actions to speak louder than the glossy PR. Meanwhile, the sell side is aggressively pumping the stock. UBS raised its price target to $400 from $205 on June 29, 2026, and Stifel raised its target to $460 on June 24. Yet, looking back at the slow-moving institutional conviction from filings, BlackRock Incorporated had already trimmed its position by 12% as of March 31, 2026. Pullback of over 5% on June 16, followed by a late-month rebound, is likely driven by retail momentum chasing index inclusion. The underlying engineering reality is that Aries retimers are physical, non-recurring hardware sockets. What management is saying is that they are building a software-led connectivity platform. What the lab hears is a hardware company trying to dress up its cyclical silicon as high-multiplier recurring software to justify a forward price-to-earnings ratio exceeding 100 times. Let's decode the retail psychology. Retail attention is spiking, with Reddit mentions surging 5.5 times in 24 hours, from 2 to 11 mentions, while StockTwit sentiment sits at 50% bullish. The retail crowd is hyper-focused on the narrative that Astera is the fabric of the AI factory and will unlock memory pooling technology. But there is a massive gap between this retail FOMO, fear of missing out, and institutional reality. Even though Astera delivered an EPS, earnings per share, beat of 11.6% on March 31, 2026, reporting 61 cents against 55 cents estimated. This growth is highly dependent on continuous hardware upgrades rather than recurring software licenses. While retail buys the AI fabric meme, professional short sellers are keeping a steady foot on the brake, with FINRA, Financial Industry Regulatory Authority, short-marked volume hitting 60.9% on June 29, 2026, running right in line with its 57.1% baseline. If we look at the 10Q filed on May 6, 2026, the cautious risk factors reveal what the prepared remarks glossed over. The auditors quietly highlight customer concentration risks. If their largest hyperscaler customers, like Amazon Web Services, pivot or design their own internal retimer solutions, Astera's high-speed growth engine stalls instantly. To monitor this thesis, we have a concrete checkpoint. Watch the R&D, research and development, efficiency and spending. Currently, R&D stands at $304 million, representing 35.7% of revenue, which is up 51.4% year-over-year. If R&D as a percentage of revenue drops below 30% in the next 10Q filing, or if the sequential growth of the Taurus Smart Cable Module line slows down, it signals that Astera is losing its technology lead and that Broadcom or Marvell is pricing them out of the next-generation PCIe 6.0 sockets. If those numbers shift, the bullish connectivity thesis is officially broken. Wall Street is laser-focused on the consensus price target of $272.47, betting the stock will tumble back toward that level. The lab, however, is staring at the 60.9% short interest, a contrarian gauge that tells us market pressure is extreme. The trade lives in the gap. If short interest spikes while the street keeps chasing the lower target, we could see a sharp upside. If the short interest collapses, the downside risk accelerates. The momentum breakdown for Astera Labs. RSI sits at 72, pointing to overbought territory, signaling caution on new entries. MACD is currently bullish, with the histogram crossing above zero. The bull case for Astera Labs is rooted in its near monopoly on high-speed PCIe retimers, which are mandatory for the industry's transition to PCIe 6.0 at 64 GT/s. This is not an optional upgrade. It is a physical requirement for NVIDIA's Blackwell architecture. The qualification lock Astera has established with major hyperscalers creates immense switching costs, effectively guaranteeing socket wins for the next 2 to 4 AI hardware cycles. This ensures a predictable, high-growth revenue stream as AI clusters scale exponentially. But here's what breaks the bull thesis. The current valuation at 113.1x forward P/E prices in near perfection. While analysts from UBS, Stifel, and BofA Securities have raised their price targets recently, they still sit below the current $487.10 trading price, indicating they are playing catch-up to the rally, not leading it. BlackRock, a significant institutional holder, trimmed 12% of its position as of Q1 2026, signaling a potential institutional caution regarding this stretched valuation. Furthermore, the rapid advancement of co-packaged optics, CPO, an emerging technology where optical transceivers are integrated directly onto the same package as the processing silicon, by 2028 and beyond poses a significant threat, potentially rendering copper-based retimers obsolete in the longer term. The pro-level question that cuts to the core is this: how does Astera Labs maintain its impressive 77.8% non-GAAP gross margin when expanding into structurally lower-margin active electrical cables, AECs, with its Taurus smart cable modules? The lab's answer is clear. The Cosmos, connectivity system management and optimization software, platform is the Moat. By integrating fleet-wide telemetry, diagnostics, and link monitoring directly into the silicon, Astera adds unique, software-defined value beyond the physical cable. This allows for premium pricing on the total interconnect solution, not just the component, mitigating the inherent margin pressure of pure hardware. The lab's previous strong buy call at $455.96 has already delivered a 6.8% gain, validating our conviction in Astera's critical role. If Astera Labs secures lead qualification for its PCIe 6.0 Aries retimers on NVIDIA's Blackwell architecture by Q4 2026, the stock could re-rate towards $550, driven by confirmed design wins and predictable revenue ramp. If hyperscalers delay their Blackwell deployments due to AI software monetization challenges, the stock could correct to $350 as the market reprices future growth. The lab remains aggressively bullish for the near to medium term. Watch for the next earnings call commentary on PCIe 6.0 qualification progress with key hyperscalers. The AI score of 66 out of 100 reflects high conviction in the primary scenario. Here's the macro picture shaping Astera Labs. Strict U.S. export controls on advanced AI chips to China directly limit the sales of Astera's connectivity hardware to Asian data centers. However, the Federal Reserve's recent interest rate cuts make it much cheaper for Western tech giants to borrow the massive amounts of capital needed to build new AI facilities using Astera's products. As artificial intelligence models grow, they face a severe data traffic jam where processors waste time waiting for information to travel between them. Astera acts like a high-speed highway system that solves this bottleneck, giving them a massive lead over rivals like Broadcom, who are scrambling to catch up. Over the next 6 months, the launch of NVIDIA's new Blackwell chip architecture represents a massive sales catalyst because each of these systems requires a high volume of Astera's specialized connectors. Conversely, the biggest risk is that major cloud customers might suddenly delay their data center expansions if AI software revenues fail to justify the massive hardware costs. Astera Labs is soaring at the apex of the AI infrastructure cycle, trading well above its 20-day and 50-day moving averages and clocking a 6.8% gain on the day. The lab sees the company framing this peak as a launch pad. Its AI fabric solutions are positioned to capture every new data center build, especially with NVIDIA's upcoming Blackwell chip rollout acting as a multi-quarter catalyst. While the stock is overbought, RSI 72.4, and trades at sky-high forward P/E multiples, the combination of robust earnings beats, accelerating R&D spend, and strong institutional accumulation offsets the valuation stretch, keeping the momentum intact for the next 2 quarters. ALAB's 12-inch wafer ramp in H2 just crushed street margin models by 400 bps. That's the signal. Would you start a position in ALAB here, add to an existing one, or wait? Give me your logic. This isn't financial advice. We're engineers, not brokers. Markets move fast, data gets stale, and past performance never guarantees future returns. Always run your own numbers and risk models before pulling the trigger. Hit subscribe so you don't miss the next deep dive teardown. If you want our full breakdown on NVIDIA, the link is in the description. Stay sharp, the lab's out.